Right. Good evening, everyone. I want to do a quick recap on trading for the last 2 weeks, starting from April 1st. For me, I trade both gold, BTC, NASDAQ, and pound USD. Overall, the whole point of this video is just to share insight on what are some particular trades that could have been taken, how they could have been taken from my POV, and why, and some analysis of what I have learned over the time trading in terms of refining my setups. One thing I do share is over the last few weeks, I can see that the pound and Nasdaq have moved kind of similar in a way of just high bullish trend, while gold and BTC have had this amazing, nice trend of structure, retracement, and setup. My prime focus will be on BTC and gold, but in line with just the Nasdaq and the pound. For Nasdaq, uh, we've seen an amazing bounce back from an all-time red, sorry, to an all-time high. After a massive dump from the beginning of the year, actually, and price rallied up. According to record, it broke the last 40-year record in terms of how fast it was able to rally. For the Nasdaq, I just saw two setups for the last 2 weeks, and these were trades that could have been held for a very extensive period of time. So I won't really buttress on that for too long. For the pound, we just had this SMT year break, but this was where the real market shift happened. An inducement entry had a reason to believe price would come back here, but it didn't. Price rallied up, and then there was a major news that caused a spike into this place, and price rallied up again towards an order block we had right up here. So I won't really spend much time. We are really expecting to see some very high volatility once the market opens in the next few hours. But my real interests are BTC and gold. For BTC, price has had some amazing move. Let's go to the 2 hours right here. As you can see, price has had this trend up, down, trend up. We've just been seeing bullish momentum. But then there was something, there's this setup which is quite common, which is, sweep, you see an inducement, and then you come back and you take the trade, right? Taking your trade from the inducement here. And we've learned that you always look for prime setup from year to year, expecting that the liquidity should be here. But there's something I've observed with respect to other blocks. As we know, other blocks is the last candle right before the bullish or bearish engulfing, right? You can see right here, we had the sweep break, and reference, as you can see, taking it from here, this was not too close. Well, it was a good entry. Price could have been taken from here, like this, puts just above there, but refining it further on the 1 hour, I noticed something which is this. So this, as you can see, down to the high, the liquidity is not actually just this one here, but also this one. So this could be considered as the last liquidity in a sense. And this is something I just observed from taking quite some few losses and wins this last week on the market. And this is the whole other block right here. So this was quite an observation for me, just putting it into detail. Then we had a rally up, price traced, swept again. into a 2 hour order block right here. And as you can see, now we're here again with the sweep, a break, and taking it from here to the high. You can see that we have quite an inducement here. So this is how do you call it, a type 2 setup. But if you take it from here, you can see it's quite already inside the discount zone. But if you take it from here, you might think price might still come down here. So let's just see how that works out. So this is just me back testing and studying the charts. So if price comes down, it can react from here or react from here, and stop loss would just be, for me, stop loss is just below where the sweep happened. So right here, and targeting 1 to 2.5. Yep, that's what I have in mind. So this is something I've been learning on gold, on BTC. Now for gold reacted beautifully this last week. As you can see from the 4 hours, we've been trending. We had an order block here, another order block here, another one here, then this one. I just got to understand based on this particular setup right here, which I had to go study again because I felt like I was mixing up the other block. My experience of other blocks was, price had to create a bearish candle, and then the next candle will sweep. Once it sweeps, it comes up, and then you have an order block with a fair value gap. But I never expected you could have a weak tapping. I expected when this week happened that this already meant to be mitigated, but I just understood now that once there is a sweep, as you can see, which is valid, it has a break, it has a gap, and in this case, it hasn't been mitigated. This is just liquidity in a sense. Because initially, this liquidity felt too far for me. If you look at it, this is okay, but here, this price was not really close to 50%. But if you see this one, it's right there. It looks much better on the lower time frame. So let's go now to the 1 hour. As you can see, so for the first one, now this one right here is what we have here. As you can see, just right above here. So you can see price tapped into OB there. Let's look at it on the 2 hour here and see how it looks like. So you can see, so this was the order block, sweep, break. Again, I thought this was a mitigation right here, so it wasn't valid. But coming down, this was the last liquidity. Price came back into the last one. Again, similar to what we have with, let me put the 4 hours here. Similar to what we have here. So, sweep, remember, last candle. Some might say last candle into liquidity might not be here, but if you look at it from here, you can see on the 1 hour. So, this is the liquidity. Anyway, let's come back to the 1 hour and spend some time on it. Price reacted there, so the other block was the last, as you can see, the last candle which price tapped into. In the second case, here this was a very long period of holding. We had liquidity. Even here there was an order block within here, so this was the last candle, order block from the week. So there could even be an entry from here up here and just below here. That could have been another setup. Price reacted, and then we kept driving up, and then here price had two possibilities as well. So again, just to buttress on a very important note I saw, which is it doesn't happen all the time, but when it does, Let me switch this to black. Sweep, break. It might not happen like that. So it's very, very key. So in most cases, price might just do this, or no, price might just do this, right? And you think, oh, this has entered the percentage, but it can come even deeper and roundly up, as long as from the low to the break. See, this wasn't in. This was the one that was in. So with this one in, this is where it came to. It swept it. So it swept this one that was closer, and we can see it here. This was the other block. Price swept, as you know, broke structure. Now we're looking for it in the discount zone. As you can see, this is the discount. But when you take it from here, so you can see this was the candle that was inside the 0.5. Price came in to tap it, and boom, went up. Now, even if you missed this one, there is a refined one on the 15 minutes again. So you can see price just literally what we just did here. Price repeated it again. So sweep, right? We had this is a type 2 setup. So price has an inducement just before the break. And if you look at it, taken from the low to the break, where's the break? Yes, here. So you can see price came to the one close to it, tapped it again, rallied up. And even here, there could even be more refinement again, but at that point, you're just aiming for too much. But yeah, this is an interesting insight I saw from last weeks of trading the market, and I hope I'm going to share some interesting insights that one could go. But right now, the market is a bit shaky with the whole Iranian news, and I think we're going to experience some very amazing volatilities as the market opens. So yeah, good luck.